Hi there, you've tuned into ET Now. I'm Cheryl D'Souza and you're watching the weekly edition of Your Trades, where we will give you a roundup of how the markets performed in the week gone by and also what one should expect when you come to a brand new week. First, let's talk about the markets, because that one actually saw a very sharp dropping through the course of the week, with the Nifty falling below the 22,200 levels as well. Remember, a critical level coming in for the Nifty. Apart from that, there were a set of stocks that made big headlines, big waves. One of them has to be Ultratech, because they went ahead with that cables and wires foray, and on back of that you had a massive pressure on the incumbents, like you had the likes of Polycab, KEI, Havels, Finolex Cables, all of them seeing sharp cuts through the course of the week. Apart from that, you had the RBI that has gone easy on the NBFC space. They've cut the risk weight for NBFCs as well as MFI loans. So you had a lot of stocks that reacted to that on a positive note. But remember, the whole week was a week of just sharp cuts coming in for the markets. Globally, Canada, Mexico, China, they all have to brace themselves for tariffs, which will be from the March 4th. Apart from that, you have US that's eyeing about 25% of European Union duty, and they've also gone ahead and probed the copper imports. Back home, big headline, you have a new SEBI chief at the helm now. You have Tuhin Kantapande, who is the finance secretary, who is all set to become and will become the SEBI chairperson. Apart from that, you had a big exclusive interview with Jubilant FoodWorks, where they've said that same-store sales growth is the biggest driver for the ROCE for the company. And also you had Tata Capital that has said that they will come ahead with their IPO. So a lot of news pegs through the course of the week, but that did not help the markets at all, given the fact that we saw sharp cuts in this week, as well as for the month of February. Major cuts coming in for the benchmark indices, where you had Nifty and Nifty actually hit an 8-month low. Broader markets, both small cap as well as the mid cap index, both of them actually slipped in the bear market territory on a monthly basis. But that's the point of contention. That is your small cap and your mid cap. They are facing correction. We spoke to a lot of experts like Milind Karmarkar, Manish Chokhani, as well as Vikas Khemani, to understand how should investors actually approach the entire mid space in the current market environment. So let's hear out what they have to say.
You have to look at companies where, though they are small caps or mid caps, ideally a small investor should look at mid caps rather than looking at small caps. But look at those companies which can become large companies, where the opportunity is such that they can grow 10 times, 20 times over the next 10, 20 years. If you are planning to build your wealth, then I think you should not disregard small and mid caps.
The bull market uptrend, which is the structural long-term thing for 10, 15 years, I don't think I'm saying that is over. The country is still going to be growing in double digits in nominal terms. Earnings will still be growing in double digits in nominal terms. But if valuations, for example, on mid caps are still closer to 30 times than 20, and for the small caps are beyond 30 times, even today after this correction, you have to understand that these valuations are not sustainable, especially given the interest rates that are prevailing in the world and in India. And therefore, there is pain ahead. I would still think in the mid and small, there is still pain ahead.
From next 3 to 6 months perspective, answer is yes. Maybe small and mid cap might not come back as fast as they should. But at the same time, if you look at slightly longer term, mid and small cap are likely to deliver good returns. It is about company and business model and management, not really about small and mid cap. If you like a particular company and management team which will deliver over a long period of time, these are the best time to buy those companies, whether it is small company or large cap company. So of course, volatility risk in large cap can ends up being lower than the mid cap, but so is the opportunity, right? So I would say look at that way. I'm not really big believer of small versus large cap.
All right, so those are some of the views coming in from market stalwarts when it comes to actually the mid space. Like I said, very sharp cuts coming in for the entire space. But let's not forget that entire space also saw a lot of exuberance. You saw a lot of sharp rallies across the board. So now what should you do as an investor? Let's bring on board Ajay Baga, who is a market expert, as well as Aditya Agarwala, who is the head of research and investments at Invest for Edu. Thank you so much, Aditya, as well as Mr. Baga, for joining us on the show. And it's a very big question, right? What next for the markets? What are the levels that you should watch out for, be it the benchmark indices or the broader markets? And Aditya, I can see a very big smile on you. Does that mean that this is the time that you go all out and invest? Or would you say that, no, wait, hold on?
Good afternoon, Cheryl. Thanks for having me on the show. It's a difficult question to answer, to be very honest, at this point of time, because supports are breaking. Till last week, we were holding on to 22,500. This week, that support level has given away very easily, and we are down almost 6% for this month, which is a significant correction if we take a look at on the index. Things don't look all that hunky-dory at this point of time if I take a look at the larger time frame, and definitely looks like markets can be in for a larger correction. Maybe somewhere close to about 21,600 or 21,700 is something that could be the next immediate support level for the index. But having said that, you have to look at a larger picture as well. If you're looking at building a portfolio for next 1 year to about 2 years, given the fact that another 500-point correction from here cannot be ruled out, you are looking at least 2,000, 3,000 point upside as well, easily on the Nifty. So you have to take a call on what is your time horizon. That will actually define whether you should start investing now or later on. If you're just purely looking at from a trading perspective, then definitely markets still look like there is some more downside left. Until the time I see a price action and a price confirmation on the indices, which confirms that bottom has been placed, I wouldn't like to play a long trade for a trader's bet. Though indices, the indicators are suggesting markets are oversold, but yes, price has to confirm that. So I believe if you're looking at building a portfolio on large cap stocks, this is a good time to start nibbling into gradually. Look at quality names, and markets have corrected significantly, no doubt. So for a 2 years or a 1 year time horizon, if I'm looking to build a portfolio, I think it's a right time to start building portfolios. Don't get absorbed by the too much of noise that you are hearing around the street right now. And usually, Cheryl, it's towards the fag end of the correction that so much of noise actually is definitely on the streets, which is heard.
Absolutely. So that's the way how you should actually approach the markets at this point in time. Mr. Baga, let me come to you and ask you maybe a tougher question than what I asked actually Aditya, because what is spooking the markets? Do you think it is just the Trump tariff threat that's actually making the markets react the way they are? Because today you saw, or rather on Friday, you saw a very sharp cut coming in for the benchmark indices, which were actually trying to hold on through the course of the week.
Yeah, if you see how we have fallen from the all-time highs of last week of September, it started with about $50 billion globally going into Chinese stocks on the basis of stimulus stock. Then we had the Trump election on 5th November, when we saw US exceptionalism peaking both in stock markets and economic growth terms, as well as positive sentiments towards the US. We saw a lot of money going into the US stock markets. In fact, in January of this year, US stock market saw record-breaking inflows on peak sentiment towards Trump. Now there is a sobering of that sentiment that's happening, but the damage was done to emerging markets first by optimism on a Chinese turnaround, second on the Trump trade, which were both negative for emerging market flows, positive for the dollar strength. Now what is happening is the markets are factoring in a higher persistent inflation in the US, a chance of a recession engineered by Trump tariffs. So, those 25% tariffs are going to hurt global trade quite hugely. And it is right now a weaponized tariff that he's holding. And that is leading to a lot of risk sentiment going off. There is no business for Bitcoin, for example, which was a classic Trump trade, to have fallen 25%, or gold to come down from 2960 to sub 2,900 levels. This is basically what it's showing you, is that money is being taken off the table and the sentiment has got spoiled. And I would say that now that we have got the headlines on all the pink papers, tomorrow morning you will see Already the digital pink papers are carrying bloodbath on D Street. I think now we are nearing the bottom. I feel very confident when all the wirehouses start talking about mayhem and the end of the world. It's coming nearer to the end, and we have seen that we are down 20% plus on small and mid caps, 16%, 17% down on the leading indices. Another 2 weeks at this rate, we will cross that 20% barrier and be in a bear market. I think that is now holding up hope. So I'm not saying go all in. That level is still not there. And again, March 4th and April 2nd are very important dates for the Trump tariffs. Let's see what happens on 4th March, whether 25% each on Canada, Mexico come through and 10% more on China come through. Market has already reacted. You might see some buying coming in. And then on India and Europe, April 2nd becomes a very important trade. So I don't expect much of a recovery before those two dates are gone through and we get some clarity on what the impact will be. It is going to be quite a significant impact on the global economy. But right now, the good news is a faster market fall is always welcome. If you have 1,000 cuts market fall, that's very painful to go through. And that's much more difficult to regain from, to recover from. So the way this market has fallen, 5% plus in February itself, 5th month in a row, I think it's breaking records on the downward side. And now the sentiment is equivalent to a COVID time or a 2008 time in terms of sentiments and the bearish positions, which is very good for the market. So I think we are nearer to the bottom. Might take 3 months, 6 months, that no one can say.
Absolutely. But you've given us a crucial days that one need to watch out for, be it March 4th or the April 2nd that you need to watch out for, given the fact that you have Trump's tariff that could likely come in for China, Mexico, as well as Canada on March 4th. And April 2nd, we have to be very cautious about that, given the fact that India, European Union, all of them could be in the range or on the radar for the reciprocal tariffs. But other than, let me come to you and let's talk about one of the big headlines for this week, especially for a sector which actually moved the incumbents so much, and that's Ultratech. They've decided to come in the cables and the wires segment. Remember what the entire group did to the paints industry with that Birla Opus launch. They also have gone into the jewelry segment. Now it's the cables and wires segment. In light of that, how should one actually look at all of these companies, including Ultratech and the incumbents, because a lot of them saw very sharp correction?
I think it was an extra reaction, Cheryl. I don't think that it was warranted for stocks to correct 20% yesterday, despite the fact that Ultratech is a big player and it can disrupt the market. But clearly, the management also said it's not going to happen immediately anytime soon. It's going to take at least 2 years or 3 years for them to establish the market, get themselves a distributor network and all. So I think it's an opportunity. If I clearly go by the chart setup as well on Polycab and KEI, both I think are good bets. Yes, further downside cannot be ruled out, but I think majority of the correction is done in Polycab and KEI. So both the stocks I would not mind venturing into at current levels. Rather, I would stick my neck out and take certain risk in both these stocks and go long on these two stocks. Maybe don't go in all out at current levels. Maybe buy at least 50-60% at current levels, and the balance you can invest if the stock corrects further 5 to 6% in the coming weeks. But having said that, I think again I would like to reiterate that Polycab and KEI, I think so, are good opportunities at these levels. They've given you the opportunity of deep correction. So latch on to them, because maybe going ahead, the stocks might not trade at current levels, and you could see much higher levels in the next 6 months to about a year's time.
We've spoken about cables and wires segment. I wanted to understand, what are your picks then for the week, for the coming week? What should one watch out for?
I'm going little contra, Cheryl, at the moment. I think we could be in for a short covering rally next week because of extreme oversold levels that we are sitting at. Backs are completely against the wall for the bulls. So I think there could be some kind of a recovery. So I'm going in for two long trades. The first one is about India stock. Stock has actually held its ground in this weak markets and looks strong on the strong footing. So I think stocks which are still trading strong might gain some more momentum next week. So about India is a buy for me for a target of 32,500 on the upside with a stop loss somewhere around 29,500. The second is from a metals pack, and then surprisingly, metals have held ground this week, some of the stocks especially. So Hindalco is something which is looking interesting to me at current levels. I think one should actually look at going long on Hindalco for a target of 660 on the upside with a stop loss at 618 on the downside.
Counter bets coming in for Aditya for the week. But gentlemen, paucity of time, thank you so much for joining us on the show to talk about what should one watch out for, especially the crucial days that you need to watch out for coming week, and also what the markets are indicating. Thank you so much, Aditya Agarwala, as well as Mr. Ajay Bagga for joining us on the show. With that, we come to the end of this weekly edition of Your Trace. Thank you so much for watching. Have a great weekend.